Hi and welcome to this week's Symax Fintech Market Insights. As usual, it's in 4 parts. Hope you enjoy it, and more importantly, I hope you find it useful for your trading. As usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. We're not trying to provide you with advice, we're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience, and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital. Okay, so let's have a look at the highlights of last week. Yes, over the weekend, the US government finally averted a shutdown. I'll cover that more later. And oil was up, gold was down, the dollar pretty much sideways by the end of the week. Stocks dropped but finished off of their lows. There was a bit of uncertainty remaining as to whether Japan will move into positive interest rates this year or not. And central bank speakers were pretty mixed as to whether we are really at the peak of rates, or for some, if there's a little bit more to go. Right, so let's have a look at different countries. So in the US, house price index was up 0.8% month on month. New home sales were lower though. They came in at 0.675 million. And that's sort of negative 8.7% month on month. Now, Richmond Fed manufacturing was higher than expected at +5 when it was expected to come in at -6. And also durable goods were better than expected. They came in positive at 0.2%. They was expected negative 0.5%. Initial jobless claims were lower than the consensus. They came in at 204,000. GDP came in as expected at 2.1%. Pending home sales were much lower. They were down 7.1% when expectations were only 0.8%. And of course, PCE, the Fed's favoured inflation metric. The core came in at 0.1% month on month, which was a nice surprise, a little bit lower than expected, as I say, but it's still 3.9% year on year. The Chicago Purchasing Managers Index was 44.1, which was lower than expected. However, Michigan consumer sentiment was higher than expected at 68.1. So a bit of a mixed bag there. But again, fortunately, the government shutdown's been averted for the moment. It's been pushed to 45 days. Whether we're going to have more fun and games in 45 days, we'll have to wait and see, and especially as that's getting much closer to the holiday season as well. It really is time they grew up and sorted themselves out for something more permanent. Okay, so moving on to the EU. So when we look at CPI data, the core harmonised came in at 4.5% year on year, and the headline came in a little bit lower than expected. That was only 4.3% year on year, but of course still much higher than that target 2% for everybody. Consumer confidence was negative 17.8, which was in line, and economic sentiment was better than expected at 93.3. And we had some German data out as well. So the IFO beat expectations. The climate came in at 85.7. The current came in at 88.7. And expectations came in at 82.9. However, consumer confidence was lower than expected. It came in at negative 26.5. On the inflation front, CPI came in at 0.3% month on month, which gave Germany a figure of 4.5% year on year. The harmonised was a little bit lower than expected at 4.3% year on year. So retail sales were quite a bit lower than expected. They came in at negative 2.3% when expectations was only negative 0.7%. And unemployment was unchanged at 5.7%. So moving on to the UK, GDP came in at 0.2% quarter on quarter and 0.6% year on year. That was only expected at 0.4%. Consumer credit was higher though at 1.64 billion. It was only expected to come in about 1.3 billion. So again, consumers relying much more on loans or credit cards to sort of meet those household spending at the moment. And that sort of was highlighted again with the net lending to individuals much higher than expected, almost double. It came in at £2.9 billion when it was expected only to be £1.5 billion. So Japan industrial production was better than expected. It came in at 0. It was expected to come in negative 0.8% month on month. Retail trade was higher than expected, 7% year on year. And Tokyo CPI was at 2.8%, ex-food 3.8% year on year, and unemployment was 2.7%. And finally, Australia CPI is 5.2% year on year, which was unchanged. And well, for expectations anyway, and retail sales were lower than expected, coming in at 0.2% month on month. So that's it for last week. I'm going to move on to next week, and of course, you know, it's great that shutdown's been averted. It's positive for the markets. It'd be interesting to see how it impacts the dollar and stocks though on Monday. So just moving on to highlight what we do as a company. Obviously, the majority of you are probably familiar with that, but there's always some new people viewing these. So it's just to give you a little bit of an insight into Symax Fintech as a company. So apart from the YouTube, we provide daily newsletters, which include sort of global headlines, global news, and then as an option, there's fresh chart levels and pivot points each day. Then when it comes to sort of workshops, you know, if people are looking to get into trading, then our sort of introduction to trading is a great one, trading for beginners. And then for others that are already trading but have got gaps in their knowledge or their trading skills, then we can help you with those as well. We do offer 1-week courses. They can make you feel competent and confident in just 1 week. Does it make you a trader? No, but does it give you the foundations on which to build your trading career? For sure. And you know, if you've got that inner trader, I will find it. And of course, now you have the option of going for one of our new course, which actually includes a free trading challenge attempt as well. And then if you're really serious about making trading your career, then our comprehensive accredited masterclass is the one for you. It's designed to provide you with all the knowledge and trading tools required to navigate any market conditions, and also any asset class. And the next one of those starts on the 19th of June. So you've got a week to register if you're interested. Then trader mentoring, some people don't want to go through courses, but they do need help still, and I can certainly do that. Consulting, we consult to companies around hedging FX and commodity exposure. And then of course we provide a mass of educational content that can be to individuals, exchanges, to brokers. And as I just mentioned, if you're looking for that funded account, maybe you're a bit sort of undercapitalized, or possibly you just don't want to use your capital, then there's the opportunity to go through the challenge and hopefully qualify for a funded account through one of our partners, Nordic Funder. If you'd like to contact us, it's info@symaxfintech.com. Any questions you'd like to aim directly at me, it's chris.tubby@Symax Fintech. Go back to that one, christubby@symax-int.com. Just get so used to the fintech part. And of course, look forward to seeing you in the second part.